Wilsey Asset Management.
Hi, I'm Roy Robertson. Welcome to Good Business San Diego, where we're talking about the topics that are important to you, your home, your family, your health, and your money. And the following is brought to you by Wilsey Asset Management. One of the biggest news stories over the past couple of weeks has been sharp increases in the price of oil. So how does this impact you? Brent Wilsey, president of Wilsey Asset Management, is here today to explain the current situation, which is fluctuating daily. A lot of volatility. Bring us up to speed.
It's a dilemma. And as I said a few weeks ago, this will start showing up in inflation. And today, this morning, we got the PPI, which is Producer Price Index, which what producers are paying, which will be passed on down to consumers. It was at 0.7%. So that was a big increase from the 0.3 they were expecting. So it is starting to hit other areas besides the pump. But let's talk about the dilemma we have. Because 2 weeks ago, oil spiked 35% one day, almost unheard of before. Then we had last Monday, fell to $85 a barrel. And then when news came out, went up to $100 a barrel. So we have this spike up and down, driving people crazy. And I do want to talk to people about how oil gets to the pump, because what they're saying, like, gosh, it went up so quickly. Right. Well, it takes about a week or two to get from the ground to that gas pump when you put it in your car. But there's an inventory method called LIFO. And what that is last in, first out. So the expensive oil that's coming in for accounting, they're now charging that at the pump. And it's kind of funny because the reality of oil is FIFO method, which is first in, first out. They got to get the older oil out first. Right. But accounting, they can charge the higher price. The good news is when oil turns or goes down, it will fall quickly as well. So that's a good news on
that seems to work out really well for the oil companies, doesn't it?
Well, the oil companies, it does work out pretty good, yeah.
So let's talk about the underlying cause. And of course, everybody knows about the Strait of Hormuz and the situation in the Middle East.
Well, about 20% of oil, flows through the Strait of Hormuz. And it's the narrowest point. It's like 21 miles wide, which is not very big, so it's very easy to control it. And then on the northeast bank, there sits Iran. And we know the problems we're having with Iran, and Iran says, no, we're not going to let this oil come on through. So the problem is, if you have something come on through, and the United States says, we will have ships guide through. We haven't done that yet. It's not an easy task to do, because when you got the missiles, you got the drones.
Mines.
The mines is what I'm going to talk about. And there's 4 different types of mines. You have your old basic type of mine that's like a ball with these spikes on it, hits the ship, boom, it blows up. But there's other ones that are more sophisticated that are down on the bottom floor, the sea floor. Those can be ejected up to that, and they're harder to find. So sometimes it takes divers to find those. We do have mine sweepers, but it takes time, and it can't be done quickly, and that's why people say, oh, I thought they were going to do that. It's not a quick thing. You don't want to make a mistake and have one ship, one tanker blown up because, oh, we missed that one. It's not a good thing. So, and the president did come out today, and he said, look, we need some help here, because we don't even use this oil. I mean, the United States is a net exporter of oil. We don't need that oil. It's a world thing that it is.
Yeah, we were talking about this before we got started, because the biggest oil producer in the world is the United States, and yet so much of it is being exported. But that might be amended too, maybe.
It could be. We could say, you know what, if you don't cooperate with us, we'll just use our own oil. We don't need foreign oil. It is an international thing. And they do pay a higher price. There's oil called Brent crude, which is about $108 a barrel. Yeah, I like that name, huh?
Brent crude.
Brent crude. But here in the United States, we use West Texas Intermediate crude, and that's a lower price, about $98 a barrel. So we do have our own oil here, but it is a world market, and we do want the world to be able to replace. But come on, other countries, help us open the Strait of Hormuz so you get your oil.
It's going to be a while until this gets resolved. And of course, expect the volatility. And we've had this in the oil market for years too. I think 2022, the prices were about where they are now. Yeah.
So they have come up quite a bit. And they have done a few things to release strategic reserves. The IEE released about 400 million barrels. We're going to release about 170 million barrels. That will ease the pain for about 29 days is what it will do.
Okay, so stay tuned and expect that fluctuation.
Yeah. It will be better.
Investors, your mindset.
Investors, be patient.
Okay, always.
Always.
Under any circumstances.
Yes,
Brent.
you're welcome.
Brent Crude, okay. You'll find Brent online at smartinvesting2000.com. We'll be right back with more of Good Business San Diego right after this.